Chris, good morning. How are you?
Nothing much, man. What are you up to?
Well, I'm doing a market open, and I think people would rather have the market be closed right now, but here we are.
One thing you said that doesn't really make sense. Go to Finviz and look at the map right now on the market.
Okay. Let me pull this up. Okay, here it is right now.
Okay, so here's the thing. Most of the market is green. All right.
Yeah. Yeah.
Even the challenge here is that the market rally is just broadening out a little bit, right? So you're seeing people saying, well, you know what? I don't want to be in nothing but just growth. I want to look at other places in the market. So I think what it is the rally is just broadening out a little bit. And so people are saying, you know what? Maybe I don't need to be fully in mega cap. Maybe I can spread it out a little bit. And the reason why the other things are rallying. I mean, you look at healthcare like Eli Lilly and Novo Nordisk are benefiting from the issue with the GLP ones, right? So they're rallying, but healthcare is doing fine, right? Utilities, basic materials, everything, they're all just chilling right now. Why? Because they're benefiting from that lower tenure. Look at the 10-year treasury and which direction it's been going on for the last 30 days.
Okay, so basically what you're saying right here is that broader market is green, tech is red, and I think that's kind of consistent with the S&P holding up and barely being down right now as well.
Right. Well, the thing is, remember, tech and speculation right now are a little bit out of favor, and that's why you're seeing kind of like they're all moving at the same. They're moving down at the same time. But the thing is, tech at the end of the day is usually performs better than the rest of the market. So whenever you see great companies that go on sale, you should be buying them. Like not worrying about things. So like Verizon is there, TFC, SL Green, they're all benefiting from the lower tenure coming into the picture. Carnival Cruise Lines is up. So tell me, why would someone buy a cruise line versus Google right now? Well, you know what? Maybe you should have both in your portfolio so you're evening out. So don't be concentrated in just speculative stuff. The one thing I've seen with a lot of people with their portfolios is they're heavily concentrated to big tech or to like
Yeah.
speculatory
Yeah,
parts of
yeah.
the market.
Yeah.
And so the thing is, if you don't diversify, your portfolio is going to see these corrective days. Overall, though, if you hold long enough, you'll outperform everyone. I can guarantee you that. But if you want consistent outperformance over a long period of time, you got to broaden your horizons outside of just basically sitting in tech. Like here's an example: if you had bought Microsoft last year, you would be down today
Yeah.
compared to buying something like the cruise lines, right? So I think a lot of times people will be like, when I say something like, "Oh, buy a cruise line," they'll look at me and be like, "Are you kidding me? Like the most important company on the planet, and you would rather buy a cruise line versus that?" Like, no, you have to remember, you have to treat every one of these things like an individual business. If you treat it like a business, it all makes sense, right? So if you have a value like if you have a company that's undervalued or a business that's undervalued, there's a better chance that you'll outperform in the long run, right?
Are you
So
are you are you phased at all by this market correction? Because I mean, from some of the people that I'm talking to that have like kind of been veterans in the game, like as you said, the S&P is green. Broader markets are rotating. Yes, Palantir, Rock Lab, Robinhood, Nvidia, these stocks are down, but this is not one of those things
they're
where I think
also
you're
up a lot too.
exactly. Yeah.
They're up a lot too. So you just valuations eventually come back to earth. You know, I think a lot of times people they have this tendency to overdo things to the upside, and then they also overdo things to the downside, which is sell great companies that are generating cash hand over fist, right? So our job is to basically be a little bit contrarian. So when people are selling stuff off that's really good, you should be buying it. You know, now the thing is, does it? It's almost like you're fighting human nature, right? And that's
Yep.
what Buffett says. Like the stock market is just one of those things where, like, it's in our human nature to not buy things when they're falling, but then like when things are going up, it's like, oh man, I'm missing out. Let me buy this thing. So you have to learn over time to like fight that urge to sell companies because they're going down, and fight the urge to buy things just because they're going up. You know.
Okay, in terms of SMCI, you posted this right here. A lot of people are wondering why they're cutting it so close. So what did you post this morning? And I mean, do you think they're going to file the 10K?
So one of the things that I've been trying to understand is what are the possible remedies that these guys have, and then doing like a kind of like SWOT analysis to see like where exactly these guys are going to land. So number one, we've got three main issues with these guys. Of course, there's this uncertainty around, are they going to file this 10K, not file it? Now, here are all the positives that I've seen that give me some credibility. If the CEO comes out and says we're likely to do it, I kind of have to like at least check that box off. Do I believe him? 100% no, but I'd say that if the CEO is willing to publicly come out and say that, then yeah, that's like checkbox number one. Checkbox number two comes in the form of bondholders issuing convertible debt that's linked to the stock price, right? So that's check off number two. Check off number three is a whole bunch of institutional investors buying this company up, because institutional guys, either they have some level of understanding on the procedural parts of this whole kerfuffle, and they're actually doing channel checks and they're doing things that we can't see in the front, but they're doing in the background. So I'm not saying that they're doing insider trading, but they're probably getting data from non-traditional sources to make that determination before they put millions upon millions of dollars. So that institutional buying is also another good sign. So those three things are really indicative of, hey, they're probably going to file. Now, I wouldn't say 100% that they're going to do it today. My biggest fear is that they file for another extension. If they file for another extension and it goes out another 6 months, it's like, what the F? But I don't think that they could survive that kind of liquidity shock if they did that. I mean, there's a possibility that that happens, but
would they get delisted for sure if that happens, or how do you?
I mean, if they don't file, they're going to get delisted from the NASDAQ. They'll trade in OTC, but problem is, if you're trading in OTC, most funds can't hold you. Yeah. They'll dump you, you know? Yeah. So it's one of those things that this company, they make real products. They're real there. The things that I've been pretty much highlighting this morning was that they do have a lot of positions that they have openings for that are compliance related, like an auditing related. So that leads me to believe that they might have already got a CFO, because usually what tends to happen is, you don't want to hire a CFO. Well, you don't want to hire all these positions and then hire a CFO, and then the CFO kind of wants to bring in those own people. So my thinking is, looking at the job descriptions that SMCI posted, a lot of them are tailored toward SEC compliance and Sarbanes-Oxley compliance, which is exactly what we're dealing with right now. So that leads me to believe two things. Number one, they have someone who's already in like as a CFO, but is not really like public yet. I think he or she is already working in the background doing whatever they're doing, and they're getting positions opened for long-term like what is that thing called, remediation. And BDO probably said, you need this, you need this, you need this. And so they're working on, hold on one second, I gotta sneeze. They're working on it. Okay, great. All right, I've been a little sick too, man. So
yeah, dude, I must have gave you a cold. Here, let's just react to consumer confidence. This came out, and then I'll get you out of here in like 2 minutes. Here we go.
Yeah, pretty smart. The stock market going down. Headline confidence coming in at 98.3. That's February from the Conference Board. We're expecting a number over 102, sequentially significantly lower than 105.3 in the rearview mirror, and it is the lightest level going back to June of last year. Now, if we look at present situation, a bit of a different story. At 136.5, it's a little better than expected, and it's better than what was in the rearview mirror. But we see a revision. Last month moves from 134 and change to 139.9. So once again, it becomes sequentially lower. If we look at what lies ahead in form of expectations, 82.2 in the rearview mirror, which makes 72.9 the weakest level since June of 24. Now, Richmond Fed, the manufacturing index, I thought we'd be looking at 16 consecutive negative months in a row. Not to be. We got a positive number here. Moves up to 6. That's the best level going back to, wow, April of 22. And if we look at Richmond Fed business conditions or the service side, positive one, a bit of a disappointment, but it is the fourth consecutive positive number in a row. We see that the stock market, of course, moving lower on this, interest rates moving lower, and we could say that the slowing economy is the reason for interest rates moving down, but many are saying it's a flight to safety, a safe harbor trade, which is really ironic because if uncertainty is the reason the equity markets are moving lower, why should there be any less uncertainty in the future of treasuries?
All right, Chris, Chris, I'll get you out of here soon because I know you're sick, but your reaction to consumer confidence being that much of a miss right here.
I mean, it makes sense, right? You've got people, you got the Doge team basically firing people right and left. A lot of it seems to be very arbitrary, you know. You got Trump constantly coming on and saying, we're going to tariff Mexico, we're going to tariff Canada. And then the whole European thing's coming around where we're fighting Europeans. So, you know, that doesn't exactly give a lot of businesses confidence to make investments. And then at the same time, if they're not confident, then they're not exactly in the mood to hire. And so if they're not in the mood to hire, then eventually consumers are going to feel it. So this feeling that the consumer is weakening, I think that that's true. And that typically is a good thing for people who are trying to control inflation, right? If you want inflation to come down, you need people to go out there and not spend as much money.
That's true.
If you're confident that your job is 100% guaranteed, you know, you're going to get a huge bonus at the end of the year, you're going to go out there and you're going to blow some money, right? You're going to cause inflation. So when confidence comes down, you're not going to spend as much money.
So what is your interpretation then of the 10-year coming down? Is that bullish or bearish?
That's bullish, but at the same time, it's bearish. Okay. And I know that sounds a little confusing, but you have to put this in the perspective of which companies benefit from a lower 10-year and which ones are not going to benefit from it. Right. So if you're a company who has $20 billion in debt and you've got a bunch of debt that's coming due to refinance next year, you want interest rates to come down. Right. And especially if you have a business that's irrelevant of consumer confidence, as an example, cell phone providers, right? So if you're looking at something like, look at American Tower today. American Tower, they lease out cell phone towers around the country. Okay, AMT.
Yeah, they're 7%.
Look at that, and look at the last 30 days.
Yeah, the last month they are 180 to 204.
So this is a giant hedge. When you see companies that have a lot of debt because they take on debt, they finance the construction of these cell phone towers, and then over time they have fixed contracts with with cell phone operators, and they make money regardless of how the consumer is feeling. Right. Another one to look at is CCI. Right. Crown Castle.
Yeah, they're up 4%.
There you go. Look at that giant rise. And then the last one is SBA.
Yep. So here's the question. Is this rotation into some of these names that are I guess more defensive? Do you think that's short-lived? Do you think that's in the moment? Or do you think people like, my broader question is, do you think we're experiencing the run-up to a 2022 type of event?
I don't think so. I think right now we're just seeing some short-term moves that are pretty much correlated to how the government is cutting back on spending. And so I think one of the stupidest things I saw this morning was Bank of America doesn't think that there's going to be any cuts for this year. Bullshit. The market is telling you, the treasury market is telling you that basically that there are going to be a lot more cuts in the future because inflation is coming down and it's coming down fast. You know?
So why are they saying no cuts then? Like, how are they? Exactly.
That's what I don't get. You know,
unless they think inflation is going to increase irrespective of Doge or consumer confidence.
I always go back to Milton Friedman. Okay. And Trump is following Milton Friedman, and Elon's posted about Milton Friedman. Okay. The economy runs on government spending. So if you cut back on government spending, that's less money that's going to enter the economy. Okay. whenever the government spends money, whether that be on personnel, goods, or services, that money eventually makes its way into the market. So you have liquidity coming in. So like right now, let's say, and it could be something very, very irrelevant directly, but it eventually filters through. So here's an example. If let's say the federal government says, you know what, we're not going to spend $50 billion, right, in one area. That $50 billion is no longer going to go to all the people and businesses and services that the government was going to spend that money on.
Right.
And so now they're going to scale back on hiring. And if they scale back on hiring, people are not going to have as much opportunity for jobs. And if jobs come down, that means that they don't have money to spend. If they don't have money to spend, they don't spend it. And basically the economy slows down. So the whole thing with Doge right now is actually working. This is not a fault. It's actually correctly working as it should. And the goal, which Elon and the team said, is to get the 10-year down. That means that there's going to be some pain in between. And so our goal is, I don't want to feel that pain. I want to be in sectors that are going to rise during this pain period and then sell them before and use the profits to get into the ones that aren't going to be as painful. So right now I would be looking at companies, and I did this last year with something like American Tower, Crown Castle, and SBA. Find companies that are going to benefit from a lower rate environment, okay? Because they have so much debt on their balance sheet, they'll be able to refinance that down, and they're not impacted by consumer weakness. You know, you look at AT&T, T-Mobile, and Verizon. Look at those.
Yeah, no, they're all green on the day. AT&T,
Look at that.
T-Mobile, and Verizon.
So the key is now just rotate. You know, figure out which markets you want to be in and rotate. Don't sit on sectors that are overvalued, that basically are tied to consumer confidence and could end up sinking your portfolio.
But I think the nuance here is that if you have a $30 average on Nvidia and you've been there for a while, right? Or like a $10 average on Hood, obviously a DCA makes more sense if you're super long. But if you bought it Hood at the top at like 55, 60, right? It could keep going lower. And that's where I think the rotation, take your loss, rotate into something a little bit easier might make more sense.
I mean, like I said, it depends on your investing strategies and your tactics on how you want to proceed with it. You know, if you don't want to be active, you know, you just hang on to the stuff that you have and just relax. But if you are trying to be a little bit active right now, it's not the best time to be in speculative names. But then again, also, I think we're starting to bottom out a little bit. So if you look at the fear and greed index from CNN, you're seeing that there's a lot more fear in the market, and the VIX has shot up. So look at the VIX. Don't look at the fear and greed index. Fuck the.
We actually just went to extreme fear officially.
Yeah. So you can already see that speculation is out of favor right now. So companies that are more speculative, they're definitely going to take a hit. So look at the VIX right now. Fear is definitely setting into the market. Okay. So believe it or not, what's the rule that we should all be following on it? Buy when people are scared, right?
Yeah.
So there it is. Buy the high quality companies that are undervalued right now, and basically just have some patience and, you know, let it do its thing.
Okay, so the last two questions for you. A, what do you think is going to happen to Nvidia tomorrow? B, what stocks are you actually buying on this dip, if you're buying anything?
I'm not buying anything, man. I'm actually disappointed in myself because I was gonna add some spreads on CCI, mainly because if you look at CCI, it's a perfect setup. It's a low beta stock with really good yields. And the thing is, because it was in this flat channel for a while, the options were actually pretty cheap. So it was actually down to $84. And I was like, gosh, I should just buy some spreads on this thing. And I didn't get a chance to, but yeah.
So you're not buying the Google dip or the cruise lines dip or anything like that?
I have enough Google already. My cruise lines are starting to recover because they have, like, the two that I have right now, I have Norwegian and Carnival, right? Both of them have a ton of debt on the balance sheet. They are impacted by weakening consumers. But my thesis is that the reduction in interest charges in the future will outweigh the slowdown in the consumer spend.
Right.
Plus, if you look at the demographics of people that go on cruises, they're typically people that are closer to retirement, have a lot more money. They're more on the affluent side, especially on some of the more premium cruise lines. And the amount of demand that's out there is actually far outpaces the supply. So I think a lot of the cruise lines are going to benefit from that. So they're definitely like slow movers. Okay, if you're trying to think that these things are going to go to $100 tomorrow, not going to happen, right? So
The,
you
the
gotta,
reason the reason you're not buying as well is because you're just loaded up so much on these, which I understand that. Like,
yeah,
if you're loaded up a ton.
bro. If you saw my position in Nubank, you'd shoot a brick, man. Well, no, you do know how many
It's a
positions I
lot.
have in.
It's a lot.
Yeah.
You got to do something.
How's Nubank doing today? Let me see.
It's up 1%. Yeah.
Okay. So see, this is one that I'd say probably should recover nicely over the next probably like 90 days, mainly because as the 10-year treasury goes down, the Dixie usually follows that. So go to the Dixie and check that out real quick.
Yeah, 106.3. It's down.
So the Dixie's retreating, right? So dollar is weakening. Correct?
Yeah. Yeah.
So this is beneficial for a company like Nubank, who does their what is that called? Does their reporting in US dollars. So one of the things that we saw was the Brazilian real weaken against the US dollar, and Nubank got hit from that. And then the earnings came out. Earnings the reported in US dollars, so it looked really like trash. Now, on the other hand, Brazilian real is rallying against the US dollar, which means that it's almost like a tailwind for us. So as the 10-year goes down, the dollar weakens, and the currencies that have a higher interest rates compared to us, the currency should rally. And right now, if you look at the Brazilian real, they're about 11-12% on their federal, like our version of the federal funds rate. So if you look at go from currency, look at Brazilian real versus US dollar. What's that?
Yeah.
right now?
No, you're right. We talked a lot about Nubank a couple days ago, so you're
Yeah.
fair on that. So okay, so final question then. Nvidia. What do you think happens tomorrow on Nvidia?
I have no idea, man. Nvidia is just Nvidia. I mean, I don't see any slowdown in demand. So I think there's still a ton of capex that's out there. People are buying, but I don't know.
All right. Fair stuff. Thank you, Chris. We will talk to you tomorrow.
Yep. Have a good one, man.
Yeah,
Take
feel
care.
better,
Good
man.
luck for anyone who has Nvidia. Pray for me. I have a good amount of SMC. I took profits along the way, but I'd rather be in more profit. So hopefully SMC.
Well, you took out your initial, right? You took out worst case.
I took out more than my initial, so I'm good. I have negative $66,000 on SMCI right now.
All right. So we'll see at 5:30. Hopefully this 10K's out. Feel
Yep.
better, man.
Take care. Have a good one. Bye.
All right, we're getting pretty demolished right here. Tesla just went below $1 trillion in terms of their market cap, 991, 308, down 6.7%. Robinhood down 10.8%. This one now officially year to date. Robinhood was up, I think, 65% year to date. Robinhood is now up 12.9% year to date. So about a 35% retracement right here. Hood below 45, down 10%. Nvidia 125. Nvidia officially below that 125 baseline level. Below 123 means it's below a $3 trillion company, which again, I do like going into earnings, but it is nasty to see this type of a decline, down 4% right here. Rocket Lab 1985, Rocket Lab down 11%, SMCI down 10%, HIMS down 28%. That one was 72. Palantir officially below 86. We are about $2 away from being right below where we were going into Q3 or going into Q4. At this point, Palantir year to date, I think is basically flat. Palantir. No, we're still at 14%. Yeah, I forgot. We were at 60 in the beginning of the year. So, I mean, it's still up 14%. It's just not up 45% as it was before. And we're seeing some pain. We are absolutely seeing some pain. Microsoft below 400. Carnival Cruise below 24. S&P officially down 1%. Again, that picture that we pulled up was actually a good picture to kind of show that the rotation is happening. Let me pull that up again in terms of the heat map. Tech is the one that's getting hit the most. But pharma, banks, industrials, I mean, a lot of other parts of the market are pretty green. Even retailers today, ironically, Walmart and Costco are green. Even though you would think these are the ones that get hurt the most based on the perception of the consumer. Home Depot as well, up 3%. They had a good earnings and beat on the top and the bottom line earlier this morning.